Bitcoin is holding up while tech stocks wobble, but don't get distracted by the AI sell-off. The real thing that could move Bitcoin next may be the Federal Reserve. Here's the big picture. Markets have been reacting to weakness in AI-linked stocks, and that spooked some investors. But Bitcoin is showing something important. It's not simply trading like another risky tech asset right now. Instead, the bigger driver over the next few months is likely the Fed. Why? Because Bitcoin doesn't just care about headlines. It cares about liquidity, interest rates, the US dollar, and real yields. When the Fed sounds dovish, meaning it hints at easier policy or rate cuts, financial conditions usually loosen. That can help Bitcoin, because cheaper money and stronger risk appetite often bring fresh inflows into crypto. But if the Fed stays hawkish, pushes back on rate cuts, or signals that borrowing costs will stay higher for longer, that can strengthen the dollar, keep yields elevated, and put pressure on Bitcoin along with other risk assets. So even though the market is talking about AI stocks right now, the more important question for Bitcoin is, what does the Fed say next? This is why the upcoming Fed meeting matters so much. For Bitcoin, the next 90 days may be shaped less by sector-specific stock volatility and more by the central bank's tone. If policymakers sound cautious about easing, BTC could face a rough patch. If they hint that cuts are coming soon, Bitcoin could catch a strong bid. In other words, Bitcoin may be proving it has its own market identity, but it still lives in a world controlled by macro liquidity. So watch the Fed, not just the headlines. If you want more Bitcoin and macro analysis that cuts through the noise, hit like, subscribe, and turn on notifications. Because the next big Bitcoin move may start with Jerome Powell.